Hey there, and welcome to your personalized deep dive. So you're ready to go beyond just tracking your investments.
You know those spreadsheets?
Yeah,
Not exactly thrilling, are they?
definitely not. But there's got to be a better way.
Oh, there absolutely is.
Yeah.
What's exciting is there are tools out there that can make your portfolio work smarter, not harder.
Okay, I like the sound of that.
Yeah, we're going to dive into how to make more informed decisions, strategize like a pro, and maybe even automate some of those, tedious tasks.
Sign me up. I'm all about finding those hidden gems in the world of investing. Let's face it, wouldn't it be amazing to spot patterns in your trading habits?
Oh, yeah.
Like maybe you always seem to jump in right after a big market swing.
Yeah.
We've all been there, right?
Yeah, I've got you covered. It all starts with a tool that's surprisingly powerful, the trade journal. Okay, now, I know what you might be thinking. A journal
Yeah.
sounds a bit old school,
A little bit, yeah.
but trust me, this isn't your grandma's diary.
Okay. You've piqued my curiosity. What makes trade journaling so impactful?
Think of it like this. Every trade you make, whether it's a win or a loss, tells a story.
Okay.
By keeping a detailed record of your entries, your exits, even your emotional state at the time, you start to uncover those aha moments that might otherwise slip through the cracks.
You know, I've often thought, if only I could hit rewind and analyze my trades like game footage.
Ah,
Are you telling me trade journaling is the next best thing?
it's even better
Really?
because you can actually spot those recurring patterns
Okay.
and understand why you make certain decisions. For example, you might notice that you tend to make impulsive trades after hours when you haven't done your due diligence,
Oh, yeah.
or you might realize that your most profitable trades share a specific set of criteria.
Those are the kind of insights that can transform your trading. But let's be real, not everyone loves meticulously tracking every detail.
Yeah.
What about those of us who prefer a more automated approach?
Fortunately, there are some seriously cool platforms out there that do the heavy lifting for you. Platforms like markets.com with their MT4 and MT5 integrations not only track your every move, but also present your trading data in, visually engaging dashboards.
So instead of drowning in spreadsheets, I can actually see my trading journey unfold.
Precisely.
Okay.
And that kind of visual clarity is what empowers you to make those data-driven decisions and refine your strategy over time.
It's like having a personal trading coach in your back pocket.
Exactly.
Now, speaking of seeing the bigger picture, let's move beyond individual trades and talk about portfolio monitoring.
Okay.
I imagine this is where things get really interesting for those who love to geek out over data.
You're spot on. Imagine having a financial dashboard that gives you an instant snapshot of your entire portfolio's health.
We're talking way more than just your total balance and how much you're up or down, right?
Absolutely. While most basic platforms will show those basic metrics,
Yeah.
we're talking about diving deeper into things like asset allocation, how much you have in different asset classes,
Mm-hmm.
and your overall returns over various time frames.
Okay.
But then there's the really juicy stuff.
Oh, I love where this is going. Tell me more about these advanced metrics.
Think about this. Imagine being able to visualize your portfolio's growth over time with an equity curve, or being able to analyze your drawdowns, which, by the way, refers to how much your portfolio dips during those inevitable market downturns.
Hold on, can we pause for a second?
Yeah.
I know we're throwing around a lot of financial jargon here, and I want to make sure everyone's on board. Could you break down drawdown a bit further? It's one of those concepts that can feel a bit abstract.
You're right, it's easy to gloss over these terms.
Yeah.
Imagine your portfolio hits a peak value of, let's say, $10,000,
Okay.
then takes a dip down to $9,000.
Right.
That $1,000 drop,
Yeah.
that's your drawdown, a measure of how much value you lose during a downturn.
Okay, that makes a lot more sense. Now, you were also mentioning this idea of analyzing volatility.
Yeah.
What exactly does that tell us, and why should we care?
Volatility is all about how much your investments tend to swing up and down.
Okay.
A high volatility portfolio is like a roller coaster ride. Thrilling, but potentially nauseating.
Yeah.
Understanding your portfolio's volatility helps you gauge your risk tolerance and make sure you're comfortable with those potential swings.
So are we talking about needing some super sophisticated, expensive software to access these advanced metrics?
Not at all. There are platforms like Tradier, Portfolio Performance, and even personal finance apps like Kubera that offer these insights without breaking the bank.
Now, that's what I'm talking about. Powerful tools that don't require a Wall Street salary. This is one of the things I find so empowering about our deep dives. we equip you with knowledge and then encourage you to explore and find the platforms that best fit your needs and preferences.
Mm.
And speaking of finding the perfect fit, let's talk about a tool that sounds almost too good to be true. Backtesting.
Ah, backtesting. If you've ever wished you could go back in time and see how a trading strategy would have performed.
A time machine. For my portfolio.
I know, right?
Tell me more.
You got it. Backtesting essentially lets you test drive a trading strategy
Okay.
using historical market data. It's like having a simulator for your investments.
Oh, okay.
So you can see how your approach would have fared in different market conditions
Okay.
without risking a dime of real money.
Okay. That sounds amazing in theory, but how user-friendly are these backtesting tools? Are we talking about needing to be a coding whiz to make sense of them?
Yeah, it can get complex if you want to build like intricate algorithms.
Yeah.
But many platforms have built-in backtesting features that are surprisingly intuitive.
Okay, good.
Thinkorswim, for example, is known for its visual approach to backtesting, making it great for those who like to see things laid out graphically. On the other hand,
Yeah.
if you enjoy coding and want more customization, TradeStation might be right up your alley.
Okay.
And for those who love a streamlined, user-friendly interface, NinjaTrader is a fantastic option.
So it's about finding the platform that aligns with your tech comfort level
Yes,
and your preferred way of analyzing data.
exactly.
That makes a lot of sense.
Yeah.
But regardless of which platform you choose, the beauty of backtesting is that it takes the emotion out of the equation.
It really does.
You're making data-driven decisions about your strategies,
Yeah.
not just following your gut, or worse, the latest social media hype.
You hit the nail on the head. Backtesting gives you that added layer of confidence because you've seen how your strategy would have performed, say, during the 2008 financial crisis or
Right.
the dot-com bubble.
Yeah.
It's about understanding the potential risks and rewards before you dive in with real money.
And speaking of risk, I think it's time we tackle that ever-present factor that can keep even the most seasoned investors up at night.
Oh, absolutely.
It's like the silent partner in every portfolio, isn't it?
Risk is an inherent part of any investment,
Yeah.
but it's not something to be feared.
Right.
It's something to be understood and managed strategically.
Easier said than done, right?
Yeah.
Where do we even begin to unravel this complex beast? It's not like risk comes with a handy instruction manual.
It starts with acknowledging that every investment carries some level of risk.
Right.
Then it's about breaking down those risks into, digestible pieces.
Okay.
We've already touched on volatility and drawdowns, but let's add another key factor, asset correlation.
Okay.
Imagine for a moment two horses pulling a cart. If one horse stumbles, what happens to the cart?
It's going to veer off course, and probably not in a good way.
Exactly.
Yeah.
That's a bit like what happens when you have assets in your portfolio that are highly correlated.
Right.
Think about ice cream and sunscreen.
Okay.
When it's hot and sunny, people buy both.
Right.
They're positively correlated.
Yeah.
But if you've got all your money in ice cream stocks and the weather takes a turn for the worse,
Let's just say it's not going to be a pretty picture for your portfolio.
precisely. Diversification is key,
Yes.
which means spreading your investments across different asset classes that aren't all joined at the hip.
Okay.
That's where understanding asset correlation comes into play.
Right.
And then, of course, we have position sizing.
Remind us again, what does that refer to?
It's about how much you invest in each asset.
Got it.
You don't want to put all your eggs in one basket, especially if it's a basket that's prone to tipping over.
So we're talking about finding that sweet spot between maximizing returns and managing risk. But realistically, analyzing all these factors can feel overwhelming for the average investor, even with those handy tools we discussed earlier.
Yeah.
Are there resources out there specifically designed for those of us who need a little extra help in the risk management department?
Absolutely. There are platforms specifically designed for in-depth risk analysis.
Okay.
Portfolio Visualizer, for instance, lets you simulate different market scenarios and see how your portfolio might hold up.
Oh, interesting.
Then you have platforms like Macro Risk Analytics and Portfolio Probe, which offer sophisticated risk assessments using complex algorithms and models
Okay.
that can feel like having a team of financial analysts at your fingertips.
It's like having a crystal ball for your portfolio.
Yeah.
But instead of relying on magic, it's all about data, algorithms, and those fancy financial models you mentioned.
Exactly. And the beauty of these tools is that they can help you find that balance between risk and potential return that aligns with your personal risk tolerance.
Yeah.
Because at the end of the day, investing should be about making your money work for you in a way that lets you sleep soundly at night.
No, that's a goal I can get behind.
Right.
Speaking of making your money work for you, I think it's time we address the elephant in the room, or perhaps I should say, the robot in the trading room. Automated trading.
Okay.
It's a topic that sparks both fascination and fear, wouldn't you say?
It's certainly a game changer in the world of investing.
Yeah.
Imagine this. Your trading strategy is running 24/7,
Okay.
executing trades with laser-like precision, even while you're catching some Z's.
Okay, I have to admit, the idea of having my own personal trading bot army working tirelessly in the background while I sip my morning coffee is pretty appealing. But let's demystify this a bit. How does automated trading actually work in practice?
At its core, automated trading relies on algorithms.
Yeah, essentially sets of rules and bots that execute trades on your behalf based on those predefined rules.
Okay.
Let's say you have a strategy for buying a particular stock when it dips below a certain price. You can program a bot to constantly monitor that stock
Okay.
and automatically make the trade when your conditions are met
Right.
without you having to lift a finger.
So it's like having a tireless trading assistant working around the clock to seize those opportunities that might otherwise slip through the cracks. That sounds amazing.
It is.
But I imagine there are some caveats here.
You're right. Automation isn't a magic bullet.
Right.
In fact, I'd argue that monitoring your automated strategies is even more critical
Okay.
than keeping an eye on manual trades.
Interesting.
Markets are constantly evolving, and what worked yesterday might not work tomorrow. So it's not a set it and forget it kind of approach.
Not at all. Think of it more like training a loyal,
Okay.
but somewhat literal-minded dog.
Okay.
You need to give it clear instructions, keep an eye on its behavior, and be ready to adapt your approach as needed.
Yeah.
That's where your knowledge of the markets, your risk management skills,
Right.
and your ability to refine your strategies come into play.
It's about staying engaged, informed, and adaptable even with the help of automation. Now, for those who are intrigued by the idea of dipping their toes into the automated trading waters,
Yeah.
what are some platforms they could explore?
There are some fantastic options out there.
Good.
TradeStation, for example, is known for its robust backtesting and automation capabilities.
Okay.
Then you have platforms like Quant Connect and 3 Commas, which cater to a range of trading styles and experience levels.
So the key is to find the platform that aligns with your risk tolerance, your technical comfort level, and of course your investment goals.
Absolutely. And remember, it's always wise to start small.
Yeah.
Test your strategies thoroughly
Right.
and never invest more than you can afford to lose.
Wise words indeed. Now let's shift gears to another crucial aspect of portfolio management, one that sometimes gets lost in the shuffle of chasing those big returns. Portfolio rebalancing.
Ah, rebalancing.
Yeah.
It's the unsung hero of long-term portfolio health.
Okay.
It's about maintaining order amidst the market's inevitable ups and downs.
Okay, I'm picturing a chaotic garden with some plants going out of control while others wither in the shade.
Yeah.
How does rebalancing bring order to that chaos?
I love that analogy.
Yeah.
Imagine you've carefully crafted your portfolio, allocating your assets across different classes,
Right.
just like a gardener plans which plants will thrive in different parts of the garden.
Okay.
Over time, some investments will inevitably outperform others,
Right.
throwing your original allocation out of whack.
Right. So even if you start with a well-balanced portfolio,
Yeah,
market movements can disrupt that equilibrium over time.
exactly. And that's where rebalancing comes in.
Okay.
It's about periodically trimming back those investments that have grown disproportionately
Right.
and reinvesting in those that have lagged behind.
So you're not necessarily selling off losing investments entirely,
Right.
but rather making sure that no single asset class becomes too dominant within your portfolio.
Precisely.
Yeah.
It's about maintaining discipline, sticking to your target asset allocation, and ensuring that your portfolio continues to reflect your overall risk tolerance and long-term goals.
It's like tending to that garden, making sure no one plant hogs all the sunlight and chokes out the others.
I couldn't have said it better myself.
We've covered a lot of ground in this deep dive, from the nitty-gritty of trade journaling to the futuristic world of automated trading and the importance of maintaining balance through rebalancing.
Yeah.
As we wrap up, what's the key takeaway you hope our listeners will walk away with?
For me, it boils down to this. Knowledge is power, especially in the world of investing.
Yeah.
These tools and strategies, from
Yeah.
the simplest to the most sophisticated,
Right.
are all about empowering you to become a more informed,
Yes.
strategic, and ultimately successful investor.
It's about taking control of your financial journey, making decisions based on data and analysis, and navigating the markets with confidence and clarity.
Exactly. Whether you're just starting out
Right?
or you're a seasoned investor,
Yeah.
never underestimate the power of continuous learning, exploring new tools, and seeking out information that can help you achieve your financial goals.
And on that note of empowerment, we'll wrap up this deep dive.
Sounds good.
We hope you've enjoyed the journey and feel inspired to explore these tools and strategies further. Until next time, remember the most valuable asset in your portfolio is your knowledge.